Welcome back to another video. Today we're going to go over Alibaba. This stock has been beaten down. If you're looking at the max chart, it's actually near where it was when it IPO'd in 2014. This is my largest holding in my portfolio. I've been talking about this stock constantly over the past year. So today we're going to go over why I still love the stock despite it being down 63% from its all-time highs. Welcome back to another video. My name's Adam. I apologize for not posting lately. It's been a bit of a rough patch for me, but just trying to get back on it. So welcome back to another video. So at its peak, it was about over $300 a share, where I think it was like a $700 billion market cap. Right now it's sitting at $300 billion, so lost more than $300 billion in market value. And if you look at Chinese stocks, it's a similar story across all Chinese stocks essentially. In total, they wiped, based on the crackdowns from China, Chinese stocks wiped over $1 trillion off of investors' profits basically since the crackdown, especially in terms of tech. There's a lot of cybersecurity worries. That's why Didi, the Uber of China, is going to get delisted. It also didn't comply with any regulatory instructions from the CPP. So basically, as a backlash, the CPP is punishing Didi. The same goes for Alibaba. They had to pay one of the biggest fines ever. I think it accounted to about 2.8 billion US dollars, and so their profitability in 2021 took a hit as a result. And I mean, year to date, it's down by 6%. There was a time where it was down by 36%, but then there was a huge spike up after the Chinese government basically said it would support all Chinese stocks. And so there was a spike of like 37%, I think, in the span of literally one day, which, I mean, it takes a lot of buying pressure to move a company like Alibaba up by that much. But yeah, and ever since then, it's up by 47%. And I've been continually buying on the dip. I'm still not even at my break-even price, but even at these levels, I think Alibaba is a steal and a half, and I'm going to go over why. So overall, the main reason why I would buy Alibaba is because it has really good long-term growth projections, not a lot of downside risk, but again, I'll say right away that the major downside risk is that you're investing in China. Although China is a growing economy, there are, unless you live under a rock, you probably know about US-China tensions, and of course the main concern that everyone's being worried is if Alibaba will be delisted. That's the major risk in investing in Alibaba. I just want to say that right off the bat. But I think without risk, there is no reward. And at least this article on March 11th is saying that Alibaba shares being delisted is unlikely. First of all, the depository receipts, which are like American depository receipts, are like basically shares of Alibaba listed on the New York Stock Exchange, could only get delisted in 2024 at the earliest, and only after companies fail to subject themselves to an audit review for 3 consecutive years. And so far, Baba has been trading on the market since 2014, and they've always complied with auditing regulations and all that stuff. And there was a pretty big concern for, I mean, like over a year that Alibaba would get delisted. Like this fear has been going on in Alibaba since its beginning. And I mean, we can see at one point it was down by 48% when it listed from 2014 to 2015. So over that year, you would have been down a lot. And a lot of people are saying in my comments, oh, like this aged well or whatever, when I was saying, oh, I'm buying Alibaba at like, $200, and now it's at around $112. But I mean, okay, so I buy at $200, then I buy at $100. So I don't know, now my average cost I think is around like $150. And then, I mean, look where it was. It was at one point $309. I believe it could easily surpass that level, maybe within a year or two. I'm not really sure the time frame, but if I'm gonna get 2x return on my money, double my money in the span of like 2 years, that's an investment that I'm willing to take. And look what happened. If you kept just buying on this dip, historically you would have done really well. You could have sold here, and I guess it took 2.5 years. for 200% return, or you could have waited and potentially even made a 400% return if you bought here. So all I'm saying is, just because I post a video and the stock goes down does not mean that invalidates the long-term potential and gains of the stock. And if you need to know, of course, the business model behind Alibaba and where Alibaba is situated in the global economy, it's not only involved in distributing parcels. It's basically the Amazon of China, so distributing parcels within China. But it's a huge play in the drop shipping business model, or buying products in China, shipping them to America, and selling them at a higher price in America. And if you don't know what drop shipping is, I'm trying to start that out, but I would recommend to search it up. And that's part of the reason why Alibaba is so huge. It has more users than Amazon. It has about like 1 billion active users, I believe, monthly, or 900 million around there, and it's expanding quite rapidly in other Asia countries. So I don't want to say that this is a company that's too big to fail, but on the other hand, it is expanding in its international reach and trying to comply with all the CPP regulations. So overall, that's why I like Alibaba. Also has a ridiculous forward price to earnings ratio of 12. Trailing P of 31, again, mainly because of that fine that they had to pay. And if you're looking at the growth, this is why I love Alibaba. It's just like a growth company priced like a value company. Current year, they're expected to make 21% in sales growth. 2023, 14% in sales growth. There's also, I think, part of the reason why Chinese stocks are down is because COVID cases are rising in China, which is obviously not good for the retail market in China, and so Alibaba will take a hit, especially if their factories have to shut down, especially because China has a zero COVID policy. But I mean, some positive news is, well, of course, they reported their December quarter results. That's when the stock kind of tanked a little bit. But more recently, this past week, they reported that they announced the company's board has authorized to upsize its share of repurchases from $15 billion to $25 billion. So that's huge. That, again, goes to show that they really believe in the company. So $25 billion, I mean, it's no joke, It's, I guess if it would be 25% if it was a 100 billion company, so divide that by 3. That's like an 8% dividend almost. If they're purchasing 25 billion shares. So that's a significant deal there, right? And so that's, again, I don't think these delisting threats are likely, at least for the foreseeable future. And there's also kind of other moves in the market, such as SoftBank selling its stake because it has so many tech companies, and tech companies got absolutely slaughtered during the situation where we're in right now, where interest rates are rising. There's a lot of uncertainty in the market, especially with the conflict going on in Ukraine and Russia. But I mean, I think as long as the fundamentals of the company are solid, and they are, I mean, I think you can ignore the noise and buy when there's blood in the streets. Buy when the valuation of Alibaba stock is down by $300 billion off of its peak. So yeah, again, it's just a sign of confidence about the company's continued growth in the future. I went over their quarterly results, their Q4 results, in a previous video. If you want to check that out, I highly recommend that, just to go over, because you have to look at a company's results if you really want to buy shares. It also helps that renowned investors, Warren Buffett and Charlie Munger now owns 602,000 shares in the Daily Journal stock portfolio, basically of which Charlie Munger is a board member of, which now makes up 28% of the Daily Journal's portfolio. Right now, that he's probably down on this position by quite a bit. I think his average price is around $120 or something like that, but he basically doubled his position in Q4 of 2020 before even the worst hit to Alibaba took place. So this really helps. And I mean, if you're looking at, like, Charlie Munger is also on the board of directors of Warren Buffett's Berkshire Hathaway. If you want to go and take a look at their stock, it's at an all-time high. And they just also made an acquisition. I also hold Berkshire Hathaway stock. It's basically it owns a conglomerate of smaller companies and owns stakes in something, in Apple, in Pepsi, etc. I mean, just like look at this over the past 5 years. Okay, you would have made 115%. I mean, that's not like, amazing. You're not making thousands of percents, but like these people know what they're doing. If you go on the max chart, you start at 1996, whatever, you're up by 10x, 1,000, close to 400%. I guess 13x. So, I mean, they know what they're doing, and I think Munger buying Alibaba is also a sign. I mean, you need to do your own research, but it's a sign to me that he's confident in the stock. I'm really confident in the stock. Maybe delisting fears are a bit overblown. So maybe it's time to pick up even a few more shares of Alibaba, especially since this might be really the lowest of the low, where investor confidence in Alibaba is the lowest. And that's when you tend to make the most gains, right? So let me know what you think of this video. I'd appreciate a thumbs up and subscribe if you haven't already. I hope you're all taking care, stay safe, and yeah, peace out.